Assalamualaikum and hi, my name is Muhammad Haikal bin Muhammad Muzani and my matrix number is DF230152. Now I'm going to present about chapter 1 which is introduction. So the event that we joined names is Pop-up Bazaar F Cup that date on the 6th May 2026 that located at the UTHM F Cup lecturer and staff parking lot. So the event format is a one-day pop-up bazaar. So the menu, there are variable menu that we use, which are cake batik RM 3 ringgit, cheese curd RM 5 1 ringgit 50 cent, and macaroni which have fried and bolognese. Each of that is 5 ringgit.
Assalamualaikum, my name is Muhammad Afan Mezai. My number matrix is DF230142. So now I would like to present about the chapter 2, business profile objective. Profile box, a short-term micro enterprise engineered to generate empirical financial data and test economic evaluation method in a live market environment. The first one is about execute systematically, plan, pursue, and launch a viable one-day storefront operation. Second, measure and monitor, track real-time financial cash flow and performance metric. And the last one is access viability. Evaluate short-term feasibility using core engineering economy principle. That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Zakir Irfan and now I will be presenting for chapter 3, cost analysis and initial investment. So the total initial investment, which is the fixed cost, is 94.8 ringgit, and we consist of 20 ringgit of infrastructure rent. We have the tent and the site rent. We have the operations and cleaning deposit, which is RM20. And then through my analysis in Excel, the calculations, the total for utensils and packaging is 49 ringgit 80 cents. And for the utilities, which is we only use um, RM5 for the ice. Okay, now we are going to see the financial performance dashboard. And here we can see the total revenue, which is 475 ringgit. And we also have the total cost, which consists of the fixed cost and the variable cost. And based on the formula, we for the net profit, to know the total profit, we need to use TR minus TC, total revenue minus by total cost. And here, based on this diagram, we have the fixed cost as 94 ringgit 80 cents, variable cost 259.46 ringgit, and the total of net profit is 120.74 ringgit. So we distributed it across 5 members. So we divided that number by 5 and we get 24.15 cents, 24 ringgit. So now I'm going to explain about the break-even point analysis, and based on my calculation, the break-even sales target is RM 208.92. However, we did enter the profit range, which is RM 266.08. Reaching our total profit is 475, meaning that the minimum survivability mark of RM 208.92 cents was surpassed by a margin of RM 266.08. The team rapidly cleared the breaking even line, securing a profitable margin early in the daily operation, meaning that we overall was able to profit from this selling event. And the contribution margin ratio is 45.38%.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Muhammad bin Muhammad Sufyan. So I will continue this presentation. to business performance and economic evaluation of our project. Let's start with the financial. Our business is stable and profitable. From our profit and loss statement, we generate a total revenue of 475 ringgit Malaysia against total expense 354.26 ringgit. This leaves us with a net profit 120.74 ringgit. This proves that our pricing strategy works and that we are generating more than enough income to cover our daily operating costs. Where is our money going? Our main expenses are store rental, transportation, packaging, and the cost of goods sold. Because we are food-based business, so COGS for raw material is naturally our biggest expense. The good news is that we are managing this cost well. Our balance sheet is healthy, and meaning we have manageable obligation and no major debt. This profit directly strengthen our owners' equity and give us a solid financial foundation. To measure the overall value and viability of this investment, we calculate the benefit cost ratio, or we call BCR. The math is simple, and we divide our total benefit by our total cost, that we get 1.34. In economic, any ratio above 1 means the benefits outweigh the cost. This quantitatively proves that our project is a worthwhile and viable investment. That's all from me. Thank you.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Iqbal Hadi bin Abdul Rohani. My metric number is DF2301.1. So moving on to chapter 6 and 7, this section focus on the feasibility of the project and the real world challenges encountered during its implementation. Based on the cost benefit analysis conducted, the benefit ratio, which is BCR, is greater than 1.0, which clearly indicate that the project is economically viable despite having a very short operating period. The available resources were utilized efficiently, resulting in a positive return. However, several challenges were identified through the project. The first challenge is, for instance, competition, as many competition stalls were attracting customers within the same area. The second challenge is involved demand forecasting, where inventory had to carefully manage to avoid the excess stock or miss sale opportunities. But in addition, time constraint posed a significant challenge because the project was conducted with 1 day period, leaving little room to recover from any operational mistake. So, in conclusion, although the project faced several real-world challenges, the overall result demonstrates that it was successfully executed and financially feasible, with effective resource management contributed to its positive outcome. Thank you.
Okay, so next we are moving on to chapter 7.1. The section validate whether the theoretical analysis is consistent with the actual result obtained during the project. On the theoretical side, the project achieved a positive benefit cost ratio, or BCR, of 1.34. So this indicates that the project was economically viable and the costs were managed efficiently throughout the operation. When compared with the actual market result, the project generated a positive net profit of 120.74 ringgit under real operation condition. So, despite facing challenges such as competition, demand uncertainty, and limited operating time, the project was still able to achieve profitability. The consistency between the theoretical indicator and the actual outcome demonstrate that the engineering economy principle applied in this project were effective. So, in other words, proper cost control combined with stable sale performance led to both positive PCR and a positive net profit. So, therefore, the theoretical prediction was successfully validated by the actual result, confirming that the overall feasibility and success of the project. Now, we are going to the conclusion and path forward. So, overall, we got a 25.4% net profit margin. Overall, Capybara Hunters provide highly viable, strategic pricing and rigorous cost constraint ensure ultimate financial sustainability. We introduce a complimentary beverage and multi-product combos deal to systematically boost the average transaction size. We also deploy targeted pre-event digital campaign and time-on-site flash discount. Besides, we secure the high traffic transit zone, which is main campus entrance, to heavily drive impulse buying. So that's all from me. Thank you.